This stock is being completely ignored right now. And I don't mean ignored like it's slightly undervalued. I mean nobody is talking about it. No buzz, no Twitter threads, no YouTubers covering it, nothing. But here's what's wild. The numbers that just came out, they are some of the most explosive I have seen from any small cap in the Indian market this year. We're talking a company whose name has the word homes in it, but it is not what you think it is. Stay with me till the end of this video, because by the time I show you the actual numbers and reveal the company name, you are going to understand exactly why I think the market is sleeping on this. Let's go. Okay, so first, what is actually going on here? Here is the setup. There is a real estate sector company in India, small cap, mostly under the radar, and for a long time, it was genuinely struggling. We're talking near zero revenue, losses on the books, the kind of company that most investors would just skip past without a second look. And then, something changed. In the financial year ending March 2026, this company posted results that made me do a double take when I first saw them. I actually went back and checked the BSE filings manually because I thought there might be a data error. There wasn't. The revenue was real, the profit was real, and the growth rate? We will get to that in a moment, but let me just say this. When I say the number is unusual, I mean it in the most literal sense of the word. Now, you might be thinking, okay, but if it's a real estate company, isn't the whole sector doing well right now? And yes, partly true. India's real estate market is in a multi-year upcycle. Housing demand is strong, Tier 1 cities are seeing record registrations, Tier 2 cities are catching up fast. But that alone doesn't explain numbers like these. There is something more specific happening here, and that is what makes this story interesting. The name of the company has the word homes in it, so your first instinct might be to think it's a builder or a developer, but it isn't. And that gap between what people assume it is and what it actually does is exactly why the market hasn't priced this in yet. So why should you care about this? Let me give you 3 reasons, and I want you to really think about each one. Reason number 1, India's housing market is structurally in a boom. We are in the middle of a real estate super cycle in this country. RERA has cleaned up the sector. Developers are more accountable. Home loan rates, while not at pandemic lows, are still manageable for a growing middle class. And government focus on affordable housing is only increasing. This is a rising tide environment. Companies that are well positioned in this ecosystem, especially in financial services around real estate, are going to benefit for years, not quarters. Reason number 2, turnaround stories are where the real money is. Think about it. If you had bought any well-known company at its peak valuation, everyone already knows the story. The upside is priced in. But a company that moves from losses to actual profits to a potential multi-year profit trajectory, that inflection point right there is historically where the biggest returns are generated. You're not buying hope. You're buying evidence of a turn. Reason number 3, and this is the one I really want you to think about. There is zero hype around this stock right now. Zero. No retail frenzy, no operator activity rumors, no stock tips flying around on WhatsApp groups, nothing. And I know, your first reaction might be, okay, but if nobody knows about it, maybe there's a reason. Maybe. We'll talk about the risk in a moment, and I'll be completely honest with you. But the flip side is this. When the market does discover it, when that first analyst note drops, or the first business channel picks it up, you want to already be in the conversation. Early investors in turnaround stories don't just participate in the upside, they lead it. Okay, now we get to the most important part of this video. What is the market actually missing here? Because here's the thing, good numbers alone don't make a stock undervalued. The question is always, has the market priced it in? And my read is, no, not even close. Here is why. When a company moves from losses, real documented losses on the P&L, to genuine profitability, and the revenue nearly doubles or triples in the same period, that is not a blip. That is not a one-quarter fluke. That is a structural shift in the business model. And markets are slow to recognize structural shifts in small caps. Why? Because institutional coverage is thin. Because the market cap is small enough that large funds can't buy without moving the price. Because there's no research report on Bloomberg for a retail investor to read. So the information gap is real, and it works in your favor. Here is what I think the market is specifically missing. 1. The turnaround has not been priced in yet. The stock is still being valued like it's a loss-making entity, or at best a break-even one. The re-rating that typically follows a profitability inflection hasn't happened. 2. Institutional coverage is essentially zero, which means the first analyst to cover this, the first fund to build a position, becomes the catalyst. 3. The revenue is now real. This isn't guidance. It's not a press release about a deal pipeline. The money is in the P&L, audited, filed with the exchange. And 4, the EPS has flipped from negative to positive. And that specific metric, earnings per share turning positive, is what triggers reclassification in many screening tools and fund mandates. Put all 4 of those together, and you have a company that is sitting just below the radar, ready to be discovered. The market is sleeping on this, and that is the insight. All right, you've been patient. Let's talk numbers. And I am going to say this once. These are not percentages I calculated differently to make them look better. These are straight from the year-on-year comparison. March 2025 versus March 2026. Ready? Sales growth, year-on-year, 244,700%. I'll say that again. 244,700% growth in revenue. From 0.01 crore rupees to 24.5 crore rupees in one financial year. Now, look, I know what you're thinking. That's a base effect. If you started from almost zero, any revenue looks huge. And you're right, that's a fair point, which is why I don't want you to focus on just that number. Let's look at what it translated to at the bottom line. EBITDA, that's operating profit, grew by 2,209%, from a loss of 1.10 crore to a profit of 23.2 crore. The company is now operationally profitable, not on the way to profitability, profitable, as in the business is generating real cash from its core operations. Net profit, the final number after everything, up 792%. From a net loss of 3.3 crore rupees in March 2025 to a net profit of 22.8 crore rupees in March 2026. That is a big jump. That is unusual. And EPS, earnings per share, went from negative 0.08 rupees to positive 0.57 rupees. Growth of 812%. And more importantly, the sign changed from minus to plus. That matters more than the percentage because it means the company is now owning for its shareholders, not burning their money. Let me just lay out the before and after clearly, because I think seeing it side by side makes it even more stark. March 2025, sales 0.01 crore. March 2026, sales 24.5 crore. March 2025, EBITDA minus 1.10 crore. March 2026, EBITDA plus 23.2 crore. March 2025, net profit minus 3.30 crore. March 2026, net profit plus 22.8 crore. March 2025, EPS minus 0.08 rupees. March 2026, EPS plus 0.57 rupees. All 4 metrics, all 4 positive, all in 1 year. The December 2025 quarter also showed early signs of recovery, so this isn't a 1-month spike. The trend was building through the year, and March 2026 was the culmination of it. This is not a fluke quarter. This is a company that has turned the corner. So what's the catalyst? What could actually move this stock? 3 things I'm watching. Trigger 1, earnings momentum continuation. If Q1 FY27, the April to June 2026 quarter, shows similar top-line growth, or even half of what March showed, institutions will start paying attention. One analyst report, one mention in a financial daily, one fund adding a small position. That's all it takes to start a re-rating cycle in a small cap with thin coverage. Trigger 2, sector tailwinds. The India real estate sector as a whole is in a multi-year upcycle. Policy is supportive, demographic demand is real, and companies operating in the financial services layer of real estate, facilitating transactions, financing, or distribution, are positioned to benefit from every deal that happens in the market. A sector-level re-rating lifts all boats, including this one. Trigger 3, media and social discovery. Right now, 0 coverage, but that changes fast in today's environment. A single well-researched video, a thread from a credible analyst account, a mention on a financial channel. The stock doesn't need to be famous, it just needs to be noticed. And once the numbers get out there and people actually look at the P&L, the reaction tends to be fast. The trigger doesn't need to be big. The stock just needs to be noticed. Now, and this is important, I have to be honest with you about the risk, because I don't make videos to pump stocks, I make videos to help you think clearly. The single biggest risk here is this. Is this a one-quarter wonder? Real estate revenue, especially in financial services adjacent businesses, can be lumpy. One large deal recognition, one big project settlement, one deferred income item finally hitting the books. Any of those could have contributed to the extraordinary March 2026 numbers. And if Q1 FY27 comes in flat, or worse, disappoints, the thesis gets significantly weaker. So here is what I am specifically watching before making any conviction decision. Number 1, Q1 FY27 revenue. Does the top line hold, grow, or collapse? That answer tells you almost everything. Number 2, order book clarity. Is there a visible pipeline of business, or was this a one-time event? Number 3, debt levels. High profitability with high debt is a very different situation from high profitability with a clean balance sheet. And number 4, cash flow, not just profit. Profit can be accounting. Cash flow is real. I want to see operating cash flow confirm what the P&L is showing. If those 4 things check out in the next quarterly result, the thesis gets a lot stronger. If they don't, it's a pass. And there's nothing wrong with that. Discipline is what keeps you in the game long term. This is not investment advice. I'm a researcher and a storyteller, not your financial advisor. Do your own due diligence before putting a single rupee into anything I cover. Clear? One last look at the numbers visually. Revenue, March 2025, essentially 0. December 2025, still near 0. March 2026, 24.5 crore. That chart looks like a hockey stick, and hockey stick revenue charts in small caps, when the fundamentals back it up, are exactly what early investors look for. Net profit tells an even cleaner story. March 2025 was a loss. December 2025, small profit, early signs. March 2026, 22.8 crore. The inflection is real. The trend is new. The market hasn't moved yet. If you found this analysis useful, hit the like button. It takes 2 seconds and it genuinely helps more people find this kind of research. Subscribe if you want more coverage like this. Hidden stories, underappreciated inflection points, companies that haven't made it to the mainstream financial news yet. And drop a comment below. I read every single one. Tell me what you think of India Homes Financial Services. Are you watching it? Have you already looked at the filings? Let me know. Remember, this is not investment advice. Always do your own research, and always be honest with yourself about your risk tolerance before you put any money to work. I'll see you in the next one.